Hi everybody, it's AJ speaking. This is a quick update on Tesla share price performance. Stock had yesterday an amazing day. Stock was up over 7% to $395 per share, almost touching 396. And you can see the daily performance in front of you here in this dotted area. This is the pre-market hours performance, and here's the after closing performance. So the during trading hours performance is seen is this part in this completely black background. You can see right after open the stock rocket higher, with most of the volume obviously occurring in the first hour or so. This is quite normal, and then there was additional significant volume at the end of the trading session. This is also quite normal. But overall, there was very strong volume, and we will look at this in a moment and look at what this might mean. But overall, very strong performance and significantly outperforming the market is very important. So what was driving this significant outperformance? So I think when we look at this Tesla trading diary and we trace the volume, we can actually pinpoint sort of the key events. So we kicked off the week on Monday, stock down 1.3% in a positive market. Market was up 2.5%. So 2.5% was the tech index. So Nasdaq 0.2% was up the S&P 500. So it was like a lackluster, underperforming day. There was various market speculation and a kind of a lack of, and also kind of a deflation after the strong Friday performance, keep in mind. Then there was a low in sort of trading interest. Stock was traded only 19 billion on Tuesday. There was also absolutely no news flow. Then came Wednesday. Here things started to shift. PPI significantly lower than what was expected. So inflation was much lower than expected in the PPI, which are often seen as a leading indicator of CPI. Then on Thursday, there was a combination of positive news events, and so Elon appeared on the All-in Pod Summit and gave a rather bullish interview, a very optimistic outlook about Optimus and various other things. I think that interview was perceived quite well, as is usually the case. But then also news broke that Tesla got a ride-hailing network expansion into another state. That these two items clearly were on Thursday the key drivers. Volume already picked up quite significantly to 37 billion in trading volume. Then on Thursday we got the CPI after Wednesday's PPI, and the CPI came in line. That then drove further interest rate cut expectations to increase. You can see this also here in the positive market performance. So this eased investors' worries about inflation potentially preventing more interest rate cuts. But you can see on this significant outperformance, Tesla returning 6% on Thursday, that Tesla performed significantly above what would be implied by the market performance. And then basically Friday, you can see market was flat, tech sector slightly positive. So Tesla returning 7.4%, very, very material outperformance over the market. So something must have happened, and especially given the massive volume of 64 billion, and we will be looking at this in a second, how this compares to historical performance. So I think what ultimately drove this significant outperformance is the combination of the following. First, the overhang removal of worry about Elon's compensation package from last week, but that was kind of old news by Friday, but it kind of started to kick in. That is a lesser driver, don't get me wrong. Second was kind of delayed effects from Elon's comments on the All-in Pod. Not everybody will have listened to that podcast immediately or a YouTube video, so it takes a little bit of time for the information to spread wide enough. There were a lot of positive nuggets in that interview. Then, of course, the influencer class needs to digest this interview, create its content, and push it out. So this then lends a multiplier effect to the All-in Summit's videos, and there is some lag effect in that. That added another boost, and that one is, of course, much bigger than the Elon comp boost. Again, this is kind of stale 1 week later. Then the inline CPI print eased investor worries. That provided helpful background for a stock like Tesla, which is what's called a long duration stock. which benefits disproportionately from lower interest rates, especially as an automaker. Then other economic data came in at a level that was perceived positively. But then there were other soft factors. Tesla announced, there was rumor that Elon now favors supporting J.D. Vance presidency in 3 years over creating America's Party. And the creation of the America's Party would have created significant political risk into 2026. And investors started to price in that removal of the political risk overhang. I think that was a very important driver for the Friday massive outperformance. Then also a couple of analysts pushed out updates after the Megapeg upgrade and also after the Elon comments on the All In Summit podcast. So I think there were certain key news events, and then the influencer class and also the analyst class, as I like to call them, had to digest that information, push out their content. So there you had these typical lag effects that you often see on breaking of material news. We see this quite often in Tesla, because Tesla is a huge retail stock, and retail investors simply don't respond as fast as professional investors because they have real lives and not just look all day long at the share price and don't typically use algorithms. So what you then see, you have this momentum building up, and on top of that there are professional firms that have long recognized these patterns and they have developed trading strategies to trade on that. So you have like a multiplier effect, and in a way it creates like a self-enforcing mechanism or a flywheel. And that then ultimately drove this substantial increase in trading volume on Friday to 64 billion. So if we take a quick look at this chart, so this chart in this teal color shows the trading volume shown in dollar billion traded. So it jumped to 64.5 billion. This was the highest level since a day in June and another day, in July, and then in June or late May. And this is a significant change over all the prior days. As you can see here, trading volume dropped many days quite low, below 20 billion, which is relatively low by Tesla standards. And then you see here in red the share price performance. On the left, you have the axis for the share price performance, jumped to this long-term high of $395, almost $396. Then when we go back to this trading diary, and if you just focus on this, let's call it center column. So Friday, 64 billion. So when you look at, so there is no day here where volume came anywhere close to 64 billion. So we have to go back very, very far to get to a day where we had similar volume. If we do that real quick, we have to scroll all the way back to this day. So this was Monday, 23rd of June. And then if we look at the trading log, what happened that day, that was a very important day. That was the launch of the robotaxi service, so June 22nd, remember that day. And I wrote here in my diary, causing TSL to rally. And as you can see here, something happened here. I'm sorry, got here a little graphical glitch, looks like. I don't know what's happening here. Okay, fixed now. So you can see that day, huge trading volume, $65 billion, stock up 8.2%, so even bigger than Friday. And then overall, also very strong market. S&P was up 1%, tech was up 0.9%, so very strong backdrop. And otherwise, yields also coming down 5 basis points, oil significantly down. And this was the day after US struck Iran's nuclear facilities, which was also, as you can see by the market reaction, perceived quite positively, because it was seen as, okay, this was like a very quick, decisive, conflict, and does not create risk of this conflict spreading more widely. And that's why, and then the following week was quite positive. So long story short, a lot of the worries that investors had in the prior week that this could escalate or over the weekend were quickly priced out of the market. But now going back to Tesla, so this was at a very different level. So Tesla rallied from the prior day close Friday, 322 to 349 that day, and that established the trading level or the trading bound for quite a long time. And we can see this in the next chart quite clearly. So this chart shows you on a weekly basis the dollar change. So the way this works is it always looks at the 1 week, so the closing price of 1 week, so on Friday typically, and then looks at the closing price of the next week, and then takes the delta and shows the change in dollar changes per share. And in the most recent week, so the week that just closed yesterday on Friday, the increase was $45. Last week Tesla added $17, and the week before that week it lost $6. Just so you understand how this works. And if we then just paint here like the bar and to see the trading level, we talked about the 22nd of June. So the 22nd of June is this week right here. So you can see here, and move the bar, so Tesla jumped on the robo-taxi, so it's this week right here, to 350, but you can see that that week Tesla was up only $1. We also have to keep in mind that week came in terms of timing relatively close after the Elon Trump feud that caused a massive sell-off in Tesla. Stock was down 51%, based on Elon's recent comments where he was joking on the All-In Summit about you cannot stop politicians about spending less. It felt like he moved on from that topic, so it appears like unless the debt problem really escalates, which I don't think happens quickly, that risk, I think Elon, that's my interpretation after following him for well over a decade quite closely and studying his profile, I think he kind of moved on, and that's why this news that he's more likely to support Vance rather than starting an America's party, I believe that's probably credible. But this video is not a political discussion, so we move on from the topic. So the point is, what this shows us, that after the robotaxi launch, which was widely anticipated because Tesla also announced the timing beforehand, what happened is the following. And for that we need to go back into this table. So here again, the first trading day after the Sunday, June 22nd launch of the robotaxi, the first trading day up massively on a very strong market, up 8.2%. But, and that's the key thing here now, next day Tesla sold off 2.4%, kept selling off 3.8%. But please note, the market was rather positive, or at least flat, and tech consistently positive during this period. So there was clearly a Tesla weakness. Tesla sold off for 6 consecutive trading days, sold off for the rest of that week, and even the first 2 sessions in the following week, until it recovered. Then there was a 5% bounce. So now let's talk about each. So why did that happen? But that's why a trading log is always quite important. You can prompt AI all day long, but I guarantee you AI will not tell you the exact events per day. I tried it; it's useless, unfortunately. It will always mix in the themes around that period, but not the specific events on a trading day, and that makes it completely useless to analyze trading effects. And you can try this out. Just try to prompt any AI really, and I tried all of them, all the big ones, the top models. They will basically blend all the themes around this period, and sometimes even the current themes, even though the current theme wasn't known at that point in time. So they struggle to really pinpoint news events to the exact timestamp effectively, strangely. But again, it's not discussion about AI or anything else. It's about, okay, what happened to TSL, so AA, so let's get back to it. So so the first sell-off, I wrote down here, buy the rumor, sell the news. This is quite common in Tesla. Again, this has to do with the lag effects with retail buying, and then hedge funds using data exploits by benefiting from it. And then there was also immediately after the launch, some influencers posted videos, and of course the mainstream media latched onto this. There were small mistakes, tiny collisions caused by a robotaxi. I find this quite silly, because the technology is expected to make small mistakes in the beginning, despite Tesla's utmost efforts. But the result is the result. So stock traded off in positive market. These are just the facts. Then the news that focused on the second day of the sell-off more on the implied valuation, what it meant. And so there was a discussion amongst investors about the high implied multiple. And the problem is the implied share price the implied market value by the share price relative to the earnings outlook implied a very high implied multiple, so that concerned a bunch of investors. But keep in mind, this came only a few weeks after the Elon Trump feud kicked off a massive sell-off. So I think this was still part of the anxiety at the time. And you can see these sell-offs. So this one, so the first one after the robo taxi spike happened on quite high volume, 40 billion. The second day was also still very high, also 40 billion. But then the third day of the stock selling off was on quite relatively low volume. Let's call it roughly middle in the range. And the problem was there was simply no news flow supporting Tesla. So there was just, there was basically a void. And you have to keep in mind that was only a few days away from the end of the quarter. And of course, at the end of the quarter, then in the last couple of days, then the Tesla discussion then shifts towards focusing on deliveries. And we kind of entered that period. And so I think the sell-off that we saw here after this massive spike was these days at least partially already investors positioning defensively, i.e. getting out of the stock, trimming their position after the massive spike in preparation of a quarterly delivery number that would not be perceived well. And then on the fourth day of the sell-off, I think we saw very much a continuation of the same dynamics. There was no material news flow, and then the stock just continued weak while the market was still positive. Then we reached the end of the quarter. The next trading session, Monday, 30 June. Stock continued to selling off, down another 1.8%, but note also on very low volume. And that tells me that a lot of investors already pre-positioned after the spike, anticipating basically what was to come, a weak delivery print. But important to note, Elon posted that weekend his frustration about the debt ceiling increase. He put out a lot of posts that weekend where he complained about the situation, and that of course, and keep in mind this was only a few weeks after the massive Trump-Elon feud sell-off. This made investors obviously very worried that another Elon Trump feud might break out, and that of course created weakness. And then we had another massive sell-off on the 1st of July. And this was then caused by Elon threatening new party creation. So basically, what was interesting about this was that you could, in real time on X, follow Elon's frustration growing as he was pumping out these political tweets. And you could virtually almost see how the heat in Elon was rising. And then, of course, Trump couldn't just sit still. And then Trump basically backfired, commented somewhere that that people should look into Elon's businesses. Of course, that was perceived very negatively by everyone. And that then drove this massive 5.3% sell-off. I'd like to point out that was amplified by a very weak tech market. That day, Nasdaq was down 0.8%. That is quite a meaningful pullback. And that also then caused a significant increase in trading volume, of course. And then interestingly, and that's why you always need to look, you can't just look at the data, you need to know what exactly happened each day, otherwise you cannot understand what's going on. And the next day, Tesla reported second quarter deliveries, and that also includes energy storage deployments. So these two numbers, with these two numbers, Wall Street can calculate with very high accuracy the EPS and also most of the other financials. And what you can see is that, so Tesla reports, first of all, 384,000 units. Consensus was right on the money at 385,000 units. I'd like to point out that consensus is kind of hit and miss. There have been a few quarters where they were right on the money, and in my view, if you're within a couple of thousand units of the reported number, I think you're right on the money. So this happened a few times, but then there were also a number of times where they were quite off by more than 10,000 units. So I would recommend not to assume, Wall Street dialed in their estimates. No, you can only make this conclusion if they, for let's say at least 3 quarters in a row, were right on the money, but not on when they hit once. Then we also need to look at sort of the community analysts and where the famous names were. They were lower. They were around 350 to 370. So they were significantly off. And I belong to that group, and I was significantly off. And I have no problems admitting when I was wrong. The main drivers why I was off was that number one, I underestimated U.S. performance. U.S. performance is always very difficult to estimate because unfortunately there's a kind of a lack of data, and the data other forecasters use is also problematic. For example, some people use wind data. If you look closely at it, it's actually not as correlated as these forecasters claim, but it's a different topic. And the evidence is that they are also often quite off. And the problem with the US market is it's not only the data availability, but of course it's a very significant market, and that is the main source of forecasting error really. But then also what affected second quarter forecasting was that there were a certain overseas market that performed extremely strongly. And that in combination led the outperformance. And I think because I think community analysts simply don't have all the data access that some of the Wall Street banks have, and that caused the underperformance because people who got, for example, access to the granular forecasting of the leading industry auto databases that are extremely expensive, and they track this stuff. And I think for that reason, Wall Street in that situation was more accurate. But let's not talk about this kind of a rabbit hole too much. Let's move on. Tesla reported deployments of 9.6 gigawatt. That was below the prior quarter of 10.4 gigawatt. So that also disappointed a few people. Let's not get too deep into it, but I think this is actually positive news for the third quarter. That the problem with the deployments is it can be quite lumpy and has to do with how these deployments are being recognized in Tesla's accounting. But as you can see on the share price reaction, despite Tesla just coming in as expected, consensus 385, delivering 384, deployments slightly below the very strong prior quarter, stock bounced 5%. So that's why, and as I said at the time, when people ask me what was my expectation, I expected this was basically priced in because my argument was that Tesla clearly moved on from just a pure auto business. So within a certain margin, outperformance or underperformance doesn't actually make much of a difference. And that's why I always advise one should not over-obsess vehicle deliveries, because I follow the global auto industry quite closely, and I know the economics of that business quite well. And even if Tesla sold 50,000 more units right now, it financially would not make enough of a difference to move the market cap needle, because Tesla's valuation is based on the assumption that all the AI products will generate massive earnings, and earnings that an auto business can never generate. Except, of course, it's what I would call AI enhanced. You can offer in the car a software feature for which people are willing to pay significant amounts of money. And I think a true FSD is such a feature. For example, I personally would pay a lot of money if the car would allow me to take a nap while the vehicle is in motion. But anyways, so let's get back to the topic. So in summary, you saw that the last time we had this massive spike in massive trading volume, there was a significant sell-off because there was close to the quarter. Investors kind of were seeking cover before a print that was probably perceived a lackluster way. Then as the print was released, we saw a positive reaction, but I think there was there was the result of investors long anticipating and pre-positioning, and then basically getting back into the stock after this period of seeking protection, basically. But then shortly thereafter, there was another significant hit on Tesla. This was the following weekend. Then Elon announced the creation of the Americas Party. That was obviously not Tesla positive. I know a lot of people on X try to position it as such, but the reality is this just would have created a lot of political overhang. And I think the recent outperformance and the rumors I discussed earlier about Elon supporting Vance, I think that is evidence that this was not a good idea. I mean, for Tesla investors at least. And again, this is not a political video. I'm not discussing the pros and cons of a third party here. but the share price reaction was quite clear. But I'd like to point out that was also on a very negative day. And then it was basically, and you can see this here in the trading volume and in the share price performance, then basically the stock, let me loosely refer to it as coasted until the earnings call. And then the Tesla released earnings, and then there was a massive negative reaction. Stock was down 8.2%, so massive sell-off. And there were a number of things in this earnings call, and I covered this that very day in a deep dive report I shared with my subscribers. But the main thing, and without going into each and every one of them, the main thing that happened that day is that Elon warned of quote rough quarters ahead. And I think the research I published before Elon talked about this clearly showed that there were a number of rough quarters ahead. And the primary reason is quite simple. In terms of financials, Tesla still depends mostly on the auto business to generate returns. And the auto business right now, it's not Tesla's fault, it is extremely tough. I follow all large automakers globally. I know all their key numbers. And I can tell you they all look really bad. There's none that performs well right now. And the reason is there's brutal price war, and everybody just fights to keep market share, while a number of companies push highly aggressively into the market and try to take market share in hope to gain enough market share to reach a sustainable scale. And for that reason, I argue no matter how many new cars Tesla launches, it will not make a big difference because the competition is just too fierce. The customer has in many markets just too many choices. So the car offering only makes a difference if there is a feature, a key software feature that makes a difference. But you cannot differentiate yourself via hardware. So that means expanding the product portfolio, launching new models has a very limited financial effect because you always have to consider the cost. And that's why Tesla needs FSD to be mature and to be launched widely. I expect this to happen relatively soon in the great scheme of things. But as Elon warned, there will be likely a few rough quarters ahead. And if you read my deep dive research, you have a good idea what that means. Many who listen to this will think, oh, but there's the energy business. Yes, the energy business is doing quite well, is growing very quickly. But in terms of relative size, it's simply still too small to mostly offset the weakness in the auto business, which is caused by this significant increase in competition, as I just discussed. So the next thing I would like to point out, Tesla then closed after this massive sell-off at $305. And that marked actually the low, at least in terms of closing prices. Actually, sorry, it's not true. Tesla coasted then a little bit up and down. So there were, this Friday, there was a slightly lower close, but basically Tesla kept as a minimum roughly the $300 mark or slightly above the $300 mark, and then started slowly recovering, but mostly traded in this, let's call it $310, $340 range for quite some time. And then if we scroll down to where we are right now we're at 396, so there's significant outperformance. But keep in mind, we are now only about, let's call it 2 weeks away, a little over 2 weeks away from quarter end. So basically, big picture is, I hope the pattern of the last quarter or end of last quarter is not a predictor of this quarter. But as usual, now as we enter the end of the quarter and early launch and run up to the quarterly results, we get kind of into the most exciting period each quarter in TSLA. So now let's look at what this means in terms of valuation. So in terms of the next 12 months earnings outlook, the recent spike in share price caused the stock to basically get significantly out of range. So just real quick for everyone who has never seen this chart, this is something I only share typically with subscribers. Right now is an exception because I can't post on X. So this is the implied multiple, not share price, based on each trading day's next 12 months earnings outlook. So based on the current next 12 months earnings outlook, the stock right now crossed over the 200 mark. This actually never happened before except for the Trump rally at the end of last year. Where the stock shot up to almost 290 times forward earnings. But then, of course, as you will remember, then quickly came back down after a multi-month period of bad news, effectively, and also driven by significant market weakness. So based on historically implied valuation, stock is right now significantly out of range. And then when we look at the implied share price corridor, of course, that confirms the same. But as you saw in the Trump victory rally, the sort of the outlier performance can go on for quite some time. And then also importantly, what I should point out, it then takes a period of negative news, and keep in mind this significant pullback reflected some extraordinary events, even by Tesla standards. And for example, the significant vandalism against Tesla is also reflected in this downward trend that not only occurred in the United States but also in Europe. So there was I think peak negativity against Tesla during this period, highly politically motivated. So that's the end of this update. I hope that was useful, insightful, and for all my subscribers listening, I hope mid next week I will be back to my normal exclusive Tesla coverage on X, probably somewhere around middle of next week. And as every quarter, I will intensify my Tesla coverage near the end of the quarter, and I will be sharing some historical analysis based on historical performance prior and around deliveries and earnings. So stay tuned for that. Thank you very much for listening. See you next one. Bye.